If the 2026 crash hits tomorrow, do you bleed or do you buy? Most people choose panic. The prepared few choose a plan. Today, you're joining the few. Crashes don't destroy wealth. They transfer it from the impatient to the prepared, from the noisy to the disciplined, from the headline-driven to the rule-driven. Your edge isn't prediction. It's preparation. Cash, rules, and courage. Say it out loud. Cash, rules, courage, because that's the operating system of winners in chaos. Forget calling the bottom. That's a hobby for people who mistake adrenaline for strategy. We're going to build a system so simple you can run it scared, tired, and half distracted. And it will still outperform your best ideas on a good day. Here's your playbook. First, dry powder. Not vibes, not hopium. Cash. Cash that sits there and looks useless until it becomes oxygen. When market sees, cash becomes a superpower. The one resource that lets you buy when the crowd begs for mercy. You don't need to be 100% cash or even half. You need enough to move without asking permission from fear. Park it safely. Short duration, liquid, boring. Your dry powder isn't for flexing, it's for striking. You're not hoarding, you're hunting. Second, automate courage. Set your entries in advance at predefined drawdowns, 10, 20, 30. Write them down. Program the alerts. Create conditional orders if your platform allows. The market hits your level, you execute. No committee meeting, no calls to friends. No, what if this time is different? Courage becomes a button, not a mood. Third, shop for earnings power, not stories. You're buying cash flow, moats, sane balance sheets, and management that acts like owners. If an asset needs a TED Talk to sound sensible, it won't survive a recession. If the thesis fits on a napkin, demand, unit economics, defensibility, you might have something real. Fourth, barbell your risk. On one end, safety, your sleep at night reserves. On the other, high conviction assets you'd be proud to own for 5 years, even if the price chart looks like a heart monitor in a thunderstorm. Cut the mushy middle that exists to give you the illusion of activity. Let's talk traps, because most people will step in them with both feet. Trap 1, I'll sell when it looks toppy and buy back lower. No, you'll sell late, because fear is slow. Then you'll wait for confirmation and miss the clearance rack while arguing with headlines. Trap 2, I'll know the bottom when I see it. You won't. Nobody does. There's no bell, just exhaustion and disbelief. Your system must buy near the bottom, not at the bottom. Trap 3, this time is different. In small ways, sure. In human ways, never. Fear overshoots. Value gets mispriced. The disciplined get paid for being early, not perfect. Your system needs a shopping list, written before the storm. 3 buckets, simple, memorable, brutal. Bucket A, core compounding. Broad, boring, productive. Think diversified exposure to the engines of the real economy. This is the backbone. When your triggers fire, this bucket eats first. You don't argue about it, you feed it. Bucket B, opportunistic quality. Great businesses punished by temporary panic, forced sellers, misunderstood headlines, prices falling faster than fundamentals. You scale in only when 2 conditions hold. 1, your drawdown triggers hit. And 2, the business case still stands up to a flashlight in a dark room. Bucket at C, hedges and alternatives. The seatbelt. Small slices of things that zig when everything else zags. You size them like protection, not like personality. Their job is to reduce portfolio regret, not to be the hero of your identity. Now, codify the triggers like a pro, on paper, in your notes, on your wall. At a 10% broad market drawdown, deploy a set percentage of cash into bucket A. At 20%, deploy again into A and begin B, only your highest conviction names. At 30% or deeper, complete the plan. This is where future bragging rights are quietly purchased. This is not averaging down blind. It's averaging into quality with rules that keep you from hating yourself later. If an asset violates your thesis, debt climbs, margins rot, moat shrinks, you stop. No sunk cost worship. Rules over romance. Risk controls are your religion. Position sizes that can't kill you. No leverage that demands perfect timing from an imperfect human. Kill switches you respect. Price alerts, thesis breakpoints, and time stops. Because being early is brave, but being early forever is delusion. Your sleep is a risk metric. If your sleep degrades more than your expected return improves, your position is wrong, regardless of how clever it sounded in your group chat. What about real estate when credit tightens? That's when distressed opportunity peeks out from behind fear. Pre-arrange financing, line up inspectors. Train your eye now. During downturns, you review listings weekly with a boring checklist. Location quality, realistic cap rate, repair budget, with a buffer, multiple exit paths. You're not guessing, you're running a process. What about crypto? Cycles there run on rocket fuel. Euphoria, purge, rebuild. Size your exposure like a rational adult. Use it as a high volatility sleeve, not as a personality test. If you can't explain your thesis with 3 sentences and a downside plan, you don't have one. Mindset, time. This is where portfolios live or die. Volatility is the fee for superior returns. It is not a fine for misbehavior. Pay the fee with rules. Don't pay it twice with panic. You are not here to win internet arguments. You're here to win decades. Common errors to delete from your operating system. Waiting for certainty. Certainty is what you get after the opportunity is left. Confusing down with cheap. Trash gets cheaper beautifully on its way to zero. Buying story stocks during panic. Liquidity evaporates faster than narratives. Going all in, all at once. Heroes get headlines. Survivors get portfolios. Ignoring taxes and frictions. Optimize for net, not ego. Treating the market like a slot machine. If you must check your rules, not your P&L. Let's make this operational in the next 24 hours. Tonight, write your 1-page plan. 1 page, no manifestos. Include your target cash range for dry powder, your 3 drawdown triggers and the exact deploy percentages, your shopping list split into ABC with 3-sentence theses, your risk rules, max position size, no forced leverage, kill switch criteria, your cadence, weekly review, 10-minute check-ins, 0 doom scrolling between. Tomorrow, set the automations. Create alerts at your drawdown levels. If possible, place conditional orders that only fire when price crosses your triggers on sane volume. Make courage default. If you have to feel brave to execute, your system is underbuilt. When do I change the plan? Rarely. Only when the world changes, not when moods change. If fundamentals shift on you, regulations, technology cliffs, permanent demand destruction, update the thesis. Otherwise, hold your fire. Your biggest enemy will not be the market. It will be your need to do something. Let's talk psychology during the fall. It won't feel like a sale. It will feel like the end of the world. Your feed will be red. Your friends will send you screenshots. Crisis hot takes will trend. That's the emotional weather report. It's not your trading plan. Your plan is boring on purpose. Because boring survives. Here's a quick imaginary case study, because stories teach what charts can't. A disciplined investor keeps 25% dry powder while times are good. They build a list of 10 core exposures. Bucket A, 5 opportunistic quality names. Bucket B, and 2 small hedges. Bucket C. They set triggers at 10, 20, 30 down. When the market drops 10, they allocate a slice into the core basket. No dithering. Now the news cycle screams temporary bounce, but their plan doesn't speak TV. At 20 down, they add more core and open small positions in their top 2 B names, because the theses still hold under a flashlight. At 30 down, everyone's confidence is gone, so their plan finishes the buy program as scheduled. Did they nail the bottom? Maybe not. Do they need to? No, because their average entry is excellent, their businesses are durable, and their risk was managed on the way in. 12 months later, the headlines have changed. 18 months later, the market remembers that earnings exist. 3 years later, the portfolio looks like it was built by a psychic. It wasn't. It was built by a person willing to be early, boring, and consistent. What about the macro? Rates, cuts, deficits, debt walls? Important? Yes. Predictable? Not reliably enough to stake your future on it. Macro is the weather. Systems are architecture. Build so you can withstand storms without needing to guess the exact hour of rainfall. Let's address a fear hiding in plain sight. What if I buy and it goes lower? You will. That's the job. Your rules anticipate that pain. Tranches exist so you can be wrong on timing and still right on outcome. Perfection is for storytellers. Compounding is for planners. Another fear, what if I miss it? You won't miss it if you're running your cadence. Panics unfold in waves. Sell-off, bounce, denial, capitulation. Rebuild. You don't need the cinematic bottom tick. You need disciplined presence in the neighborhood where bottoms are born. Let's sharpen your filters for bucket B, the opportunistic sleeve. Ask, is the problem solvable with time and competent management? Is demand deferred or destroyed? Is balance sheet flexibility intact? Does the competitive moat widen when weak hands are forced to retreat? If the answer is trend yes, your panic pricing may be a gift. If not, let it fall without you. And for bucket C, the hedges, remember, protection, not prediction. They don't have to print money. They have to reduce regret. Size them so that when the world wobbles, your hand doesn't. Then leave them alone. Constant tinkering turns seatbelts into steering wheels. Now, a word on identity. If your positions are carrying your sense of self, you're overpositioned, emotionally or financially. Detach the ego. Attach to the process. You are not your monthly return. You are the quality of your preparation and the honesty of your risk management. Between triggers, do this. Maintain your list. Update theses. Cull the weak. Elevate the strong. Read primary sources, earnings, footnotes, not outrage threads. Practice boredom. The best investors are connoisseurs of uneventful days. Train. Rehearse your rules aloud so your body can find them under stress. If you want a lightning-fast recap, you can tattoo to your desk. Here it is, 3 truths. Prediction is a party trick. Preparation is a portfolio strategy. Cash plus rules, plus courage beats vibes, plus timing plus panic. You do not need the bottom. You need a plan that buys near it. 3 moves. Build dry powder. Preset your 10, 20, 30 triggers. Stock your ABC buckets with written theses. 3 guards. Position sizes that can't kill you. No leverage that demands clairvoyance. Kill switches you respect. Here's how this looks in human time. Week 1, write the plan, set the alerts, populate the list. Week 2, test your broker tools. Place tiny practice orders at arbitrary test levels so execution is muscle memory. Week 3, choose your cadence, a 10-minute weekly review, a monthly deep dive. Week 4, audit your life risk, career, cash runway, obligations, so your portfolio does not carry burdens your life should handle. When the first sell-off hits, you will feel fear. Good. Fear is the price of admission. Breathe. Execute the first tranche exactly as written. When the bounce appears and your brain says, see, you almost bought the top. Smile and do nothing. When the second leg down punches the optimism out of your feed, execute tranche 2. When exhaustion sets in and smart people begin writing eulogies for markets, execute tranche 3, then go for a walk. Let time do what panic never can. Compound. In the aftermath, don't chase every green candle like it owes you money. Stick to the thesis. Roll profits from weak names to strong cores. Fix mistakes fast and without drama. The market forgives humility. It punishes denial. Remember why you built this in the first place. Freedom. Not to impress strangers online. Not to build an altar to your cleverness. Freedom to pick your projects. Freedom to protect your family. Freedom to ignore dumb incentives. Crashes are the toll booth on the road to that freedom. You pay by being prepared when others are performative. When people ask you, how did you know? Tell them the truth. You didn't. You just refused to outsource your future to adrenaline and assumptions. You chose cash, rules and courage over noise, narratives, and nostalgia. If you want the one-page template, you know what to do, but even without it, you can leave with this. Write your rules while you're calm. Buy quality when it's on sale. Size risk so you can sleep, let time make it. You look smarter than you felt when the dust settles, because it always does. The people who acted in fear will be forgotten. The ones who acted with strategy will be remembered as those who turned the loudest. Panic of their lifetime into the quiet start of their wealth. Prepare now, execute when it hurts, and when everyone else runs from the fire, you'll know exactly where the gold is buried. Educational only, not financial advice. Match any plan to your risk, runway, and responsibilities.